questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? How are we doing today? Good. All right, I'm going to update a trade. I just took this one off the trade that I posted on May 12th for Johnson & Johnson. I'm going to take that trade off. So I'm going to reply to that message, trade management, Johnson & Johnson entry for 398, closed for 459. J&J price is cooperating quickly, likely on the fall of UNH. So I'm protecting profit now. Okay, so I posted that on the 12th, which was 2 days ago. I'm already out of the trade, taking a nice little winner. So making about $60 a contract on that one. SPX this morning, also looking decent. Prices are centered. My daily trades looking okay. This one's up about 17%. This one is up to break even, trying to squeeze back some profits. This one's up about 20%. Let's go. This one was pulled in for 280. It's got to be close right now. 280 is going for a 235. Where the heck's my take profit here? So 225 trading at 230 right now. All right, we're close. I mean, price is cooperating. We've got a pretty good centering going on. I've got 3 trades active on SPX this morning. So let's have a look. Let's look at some currencies. Let's look at some stocks. We got the Japanese yen screaming up today. Interesting. Something happened overnight with them? They say anything? This is a move right around 4 a.m. Eastern time. I mean, I didn't see anything in the calendar last night. Nothing about the open that I would expect to see crazy flows like that. But leave it to the Japanese yen to do something silly and difficult to follow. So let's have a look at our charts today. Somebody just said my dollar yen was outstanding. Good, I guess, if you're short. I mean, are you short dollar yen? Are you short? I mean, are you looking for stronger yen? So anyway, it's all good. This is the J&J trade. I was looking to see if price would, come down to revisit 142, which it probably will. I just, I got a decent chunk of profit within, 2 days. And rather than trading a stock like this, that if UNH, and here's why I'm taking the profit, if UNH basically stalls and starts to gap fill, then you're going to see the healthcare sector, and probably the Dow perform pretty well. UNH is a behemoth. I mean, this company made more money than Google last year, and somehow this thing's down like freaking 48%. So it's been a wild ride. I mean, I've got a ratio spread that's all the way down to 260, so I'm not that worried about it. But it's just wild to see like what is like, why is there so much pressure on this stock right now? So anyway, I don't care. It's just a trade, but still, it's been a pretty crazy move. That would be like Progressive Insurance being down 50%. That's kind of how this one is behaving right now. So it's very atypical. I think we're 2, 3, 4 standard deviations way outside of what would be normal. But also that same adage of like, don't catch a falling knife. I mean, there's clearly something going on here that seems a little bit more insidious, and so I'm just trying to be careful on how I trade it. Anyway, so far so good on the SPX trades. I should have some ones closing out this morning. So watching here for my dailies. So I'm getting close to that 20% take profit. Close on both, actually. This one is actually kind of the crappier one. But if I get 2 of these trades to close, I'll probably just close the third one out just because. So if I close this one, this one's going to be the least amount. I'll probably still just close it and just get all 3 closed out for winners. We got to be getting close. 190 is my take profit. It's trading right around it. 225 is my take profits, trading right around it. This one's a little bit worse. I got in for 220. It's trading for about $2. But if I get the other 2 to close, I'm looking to get out of these trades. So let me bump this one up. So the 225 I guess I'll just wait a couple of minutes. I mean, price is pretty chill. This one's close. This one's close. Hopefully these strike here. So I'm looking for 2 alerts. Like I'm just going to go to the analysis, but if I get close, then I'm going to go into this third one and take a small profit and, have 3 for 3 on the day. Also, if anybody's following along with some big levels. So right now, basically the pain trade was everyone that was so scared in April put on puts, right? You buy puts. The puts went crazy in April, and a lot of them were the May expiration, and that's this Friday. So what is likely going to happen here, and this is just my opinion, but I think with this run up that we had, especially through the Monday U.S.-China trade talk that kind of blasted the market higher, I think that the pain trade is all those puts are going to expire worthless. And then at that time when it expires, then you're going to see the market come back down a little bit. So I still expect a gap fill. I'm kind of patiently waiting to redeploy some capital. All right, take profit, just got hit. That 280 turned to 225. So that was 280 to 225. There's a 235 closed out for 190. And then this trade is up a couple of bucks. I'm just going to go ahead and take this one off as a small winner as well. So this trade is trading for, that was a 220. Go into this one, replace, see if I can go for $2. Give me $2. Give me 205. All right, 205. Okay. So 3 for 3 on daily profit play. That's good. All right. Quick update. Gonna send this out. Entry for 280. Closed at 225. So 280 credit, close at 225 debit. Entry for 235. $205 debit. Entry for 280. Let me get these right. So 220. Close at 205. Entry for 235. Closed 190 debit. To hit the 20% take profit. 1, I closed manually for the win. Lock in 3 for 3. Okay, so taking winners on those. Good stuff. All right, let's get back to it. Top down. I'm waiting for, here's a couple of strategies I'll be deploying. If we see a pullback, okay, so a little pullback into this gap fill. A couple ways I can trade this. I think that the Trump administration is, they not only flinched hard, but they pivoted hard. I wouldn't be surprised if now the Trump administration, I mean, honestly, you don't really know, but I think that they are now going to go from the, pain is needed and, short-term pain for long-term gain. Like that whole narrative is now done. I think that what we'll probably end up seeing is they will likely celebrate higher highs in the market, right? The only thing that they're going to ignore, and they probably should ignore if they want to sound smart, is they don't want to talk about the Fed. They don't want to talk about that yields are going higher. If the U.S. 10-year, which is going higher, they're just going to stop talking about it. I don't know if the 20-year yield, if we get back up to this kind of Liberation Day, post-Liberation Day rally in bond yields, I don't know if this is going to be something where it's like put the pressure on the Fed, start jawboning the Fed and saying that, they need to do something to cut rates. Look, if the Fed cuts rates, this market, I don't know if it's going to respond favorably to Fed's cut. I mean, I think it should, because that's what it's done for 40 years of monetary policy, but I don't know if it will. And, just like we saw last year with September's cuts, like this is my biggest like question mark of what happens later this year. Because if the Fed cuts and this thing goes higher, I mean, honestly, this is still good for stocks. I mean, participating in the stock market should be good. I don't think there is crazy amounts of risk like there once was. I mean, this was like complete uncertainty around a global trade war, and now things are looking a little bit better, obviously. But we are still a long ways away in the U.S. from inking deals. The U.S. is still underperforming the entire world. I talked about this yesterday in my YouTube session. If you go to MSCI XUS, so MSCI XUS, I'm trying to think what the ticker was yesterday. World XUS. Just go MSCI. This one. So this is basically the world minus the US. Okay. If you look at this from the 12-month candle, so the year, this thing's up like 12+% for the year. The world is up. The US is not, right? So we're up 12.5% for the world. The US is basically back to flat. If you go to an XSP candle here, which is a mini, I mean, this is what the red, I mean, it's a little red sliver. So the S&P is still technically slightly red on the year, but all that is just one giant wick so far, right? Wick up to all-time highs, 20+% correction in the S&P, right back up to where we started, just a sliver of red. I posted this yesterday in my Telegram channel. This is where we are. Like, this was a snapshot yesterday at the close. We just carved out a slight green on the S&P. Okay. And then you can see the mix in sectors as well. So, top performers, top 20, bottom 20, just kind of an interesting mix of stocks this year. But there's certainly some movers. And, the things that are moving pretty well are definitely like growth is not off the table. Like what was once looking like a massive deleveraging and, growth stocks are going to be struggling. It's like all that came back in a big way. So, look at Palantir up to fresh all-time highs, right? Look at HIMS. I mean, these are two of the more outlier growth stocks last year. I mean, look at the response here. Pulls all the way back to a 200 moving average and just freaking rips to the upside. So, I mean, fun stuff if you're trading those individual stocks. I've been trying to eliminate a lot of volatility out of the portfolio, trading mostly indexes. I think I've survived the year pretty well. I'm at double-digit returns for the year. Some of my accounts are up almost 20%. I got like 19.2% as of this week's Monday, and still they're still still mostly green, but fresh highs in the year, which is fine. And we're still off the lows. I think that if we see prices pull back, and this is what I was talking about. Yield. Well, I mean, I'm telling you, Lee, that what happened in April was the bond market broke and forced Trump to pivot. The whole reason we had a 90-day pause is likely because of what happened in the bond market. The bond market is truly more important to the U.S. than the stock market. They're both important, but the bond market is how we grease the wheels and keep this debt machine running. Without the bond market, if our bond market broke, we would turn into an emerging market. And that's what everyone was saying. It's like, the way that our yields are rising, the way that we're devaluing our currency, the way that we're seeing the prices play out, the way that gold has been ripping like crazy, the bond market is what caught the administration's attention. So he may not have explicitly said bonds, but I'm telling you that Scott Bessent definitely talked about bonds, and that's probably what snapped his attention into like, hey, let's not break this freaking economy. Let's not break the world economy because we're trying to flex our muscles. So anyway, point is, if we end up falling here, I'm looking at some trades. I mean, some really nice trades that I'll probably deploy with some of my larger margin accounts would be a 1-1-1 strategy, which is I buy a put and then I sell a put and then I sell a put. Now I'm doing this on assets that I'm willing to own. You've seen me do this many times in my Pulver alerts on trades I like. It's kind of like a combination ratio spread. But if we get a pull back into here, Okay. I want that 1-1 trade to be something where it's like, I wouldn't mind owning the SPY down at this area or down at this area, because price would have to fall that much more aggressively for any assignment. If I did get assigned, then I would just try to go into repair mode. You know, um, I think the big question is like, are we going to retest lows? I think that is looking less and less likely. Like, what exactly would be this current narrative to get these markets to go from all-time highs down 20+%, reflexively up 20 plus percent, and then back down again? I mean, anything can happen, but I think that this posture is now taking out this level. We're way above Liberation Day breaking points, and I think the bulls have some cushion here that they can ride this out with plenty of support. So a dip, a higher low, I think that's likely to be way more interesting, and probably the current flow, as opposed to just head spinning. Nobody knows what's going to happen. It's up, it's down, it's a bird, it's a plane. Okay. MP, you said you're in that UNH trade. Yeah, I mean, it's all the way down to 260. I would own, I mean, if I own the stock, it'd be like 243. And if I own the stock, it'd be, I mean, I think it'd be like 60+% off of the all-time highs. And this, I mean, by the way, this fair market value is like $1,000 stock. So based on discounted cash flow, let's go to UNH here. Discounted cash flow, it's like, I mean, there's not a lot of stocks that look like this on a snowflake analysis standpoint. So the fact this thing is just down 40+% is insane. Price to earnings is actually pretty cheap. Fair value $1,300. We're trading at 317 right now. So anyway, the trade that I put in, it's a 270 by 260 ratio spread. And if I were assigned, you'll get the $10 credit from the 270 by 260, and then you have the credit on top of that for $6. And if we owned it, it'd be like 243. So I'd own the stock at 61% off. I'd essentially own this at near COVID lows. So number one, I don't think the assignment is high probability. If this thing just stabilizes, I mean, in all reality, and this is another trade I can take to add the income side. But if we stabilize in here with this previous high, I mean, I'd love to see a gap fill, a simple debit spread. You buy a call and then sell a call at a higher strike. A simple debit spread could actually offer up some really nice asymmetry. I did that over here. And obviously it didn't work out. So I lost about 350 on that trade. Um, Maybe it was $4, but I was looking for, I spend $4 to make $5. That's a slight, 120% gain if I was right. I'm going to take that same trade, and if I lost, let's say I lost $4 here. Well, if I can do the same trade and I can risk $4 to make $5, and I win that trade, well, I wash this away, I walk away net profitable, and I'll probably do that with 2 contracts. So net net, if I lose 400 here and then I gain 1,000, I still walk away positive, like quite a bit. And then I also have a ratio spread that hopefully is going to be like another $600 winner. And all of this is you're surviving a stock that's just fallen in the tank, but at the same time, it's okay, you know. So anyway, what would you own the stock at its current price? No, not unless I want a dollar cost average. If I want to take a little chunk here and say, all right, I'll throw $1,000 at it and buy fractional shares. And then if we came down to these levels here, like COVID lows, I'd say I'd throw another $1,000 at it. That'd be about the only way I'd trade it. I wouldn't be looking at a big position to call the bottom. I would say give it some flexibility to dollar cost average in over, maybe a $100 window. So that would be my plan. All right, that's S&P. We're just flat on the day for S&P. Still very, I mean, honestly, intraday pricing is super quiet today. These all are winners, so this is all winners. These are all winners. Price is right in the middle. That's perfect. Go into the Qs today. Nasdaq is up a little bit, 0.34%. Nasdaq has been outperforming the U.S. Or I'm sorry, outperforming the S&P with this move. I mean, obviously, there's more volatility on the 27% decline from the all-time highs. But we fell obviously very hard with that, kind of de-risking, and everyone's thinking like growth is dead and AI is going to be put on the back burner for a second. But the same thing applies. Look, there's such a nice gap here. Just don't be a turd and I want to see the market fill it. Like, don't go to all-time highs, because to me, all-time highs mean we got to pull back first before we get bigger all-time highs. So I would rather, in order to target all-time highs, I'd rather see a backfill into here. a little bit of a reversion. We're probably trading, over the average mean. We've obviously had like a big reflexive move to the upside. So point is, if we get a pullback here to like 490, I'm probably going to deploy again like a 111 trade. I wouldn't mind owning the Qs in this area or obviously down at the lows, and I'm okay with that. you know. And keep in mind that I did say this. I think that this market is going to try to do everything it can to get to all-time highs. I think the fiscal policy of the U.S. is going to return. It's going to be kick the can down the road, still operate at a 6, 7, 8% deficit, and just don't talk about it. Raise the debt ceiling. And look, there's a lot of things that could go wrong in the U.S. Right? I don't think the Democrats have any power to fight as far as voting goes. So I mean, I think the majority is probably going to pass the debt ceiling. Trump's going to continue to pass a bunch of executive orders. This trade talk is going to continue. So I think that it's going to be right back into a different tone, but most likely similar fiscal policy to what we saw with the Biden administration. So this whole conversation I've had, which is you have like the K-shaped recovery, which was post-COVID under Biden, and that was those that have more, those that have not have less, and that's what it's felt like for 5 years. Okay, then you have this Trump administration that's talking about an E-shaped recovery, which is going to be this is your K, and then you flatten things out to kind of neutralize like the haves are going to start paying their fair share and it's going to be, tough around Wall Street, but it's not that at all because this created the bond market flinch. So I think if anything, if we're lucky, we get something like this recovery becomes this recovery, right? Where it's like the haves continue to have the haves nots maybe get a little bit of a hand up and get assisted. But to do that, it's like prices and stuff have to come down. We are in the most unaffordable housing market ever. And I don't know how anybody can argue the numbers. I mean, I don't care about mortgage rates. Like mortgage rates are expensive, but on top of that, it's the house prices that have increased. They have outperformed the S&P for the last 17 years. That's insane. It used to cost about 2 times salary, 2 to 3 times salary to own a home. Now it's like 6 times salary to own a home based on average incomes. It's completely unaffordable at these interest rates. Completely unaffordable. So, and I mean, you can argue for a lot of things. Like it's better now. It's like it's not. There are definitely pros and cons to, if you were, getting your financial wealth in the 90s to 2000 to now, it's like if you've had 20, 25, 30 years in the markets, there's a good chance you've done pretty well. If you've been trading for the last, 6, 7 years, there's a chance you've seen some basically net zero. I mean, yes, the markets have made all-time highs, but it's not without these crazy 20+% swings that we've seen for 7 straight years. It's just nuts. Yes, the market keeps making all-time highs, but if you're scared through any of those troughs, it just messes everything up. So that's what I'm talking about. Roll Trade says they also want to raise the debt ceiling. That's my point. Fiscal spending, raise the debt ceiling. It's just going to be this very incognito way of doing the same thing we've always done, which is build on debt and have a high deficit and then wonder, when this fiscal cliff is going to happen, but keep kicking the can down the road. you know so I just think that it showed how strong the financial markets are to flex its muscles and say, look, we're going to do this. And the financial market's like, dude, you do that, you're going to break something. And I literally talked about that a lot last year. I was like, something makes me nervous, like this market's going to break, something's going to break. Well, we had a taste. It didn't break, but we had a flinch. We had a test, right? And that's the concern, is like it was close to getting way worse. But obviously it's reflexive, and everyone that's just like, see, I told you, just buy the dip. It's like, yeah, I know it worked. Okay. But at the same time, keep in mind, I'm talking big picture here. Keep in mind that longer term, when we're trading at these high ratios, if you go to the Shiller ratio on price to earnings, so here, okay, with these valuations, this thing goes back to 1975 and 1976 roughly. The only time that we were more valued from this Shiller PE ratio was back during the dot-com bubble. Okay. So does it mean that we can go higher? I mean, I guess we can. I guess we can have higher valuations. But if you look at a histogram, when the S&P 500 is this highly valued, the returns are dog shit for the next 10 years. So I mean, it's being thrown out there that for the next 10 years, like we could average like minor, like maybe 3 to 4% a year, maybe net zero. Um, and I don't know if that comes with something that looks like this, where over the next 10 years, the market's, up 30, 40% from the low of April this year, and then it gives most of it back, right? And we just have just constant ups and downs, and it's just crazy volatile. Um, I listened to this podcast last night that over the course of the last century, we've had windows of about 9 to 16 years where the market's returned effectively 0%. I don't think anybody would know what to do if that was the case. If you are a directional trader, this is your wake up call to realize like there's ways to make money in a 0% return environment. Income trading, option trading, covered calls, lowering your cost basis on things you own so you actually have some gains to squeak out of the market if nothing's going anywhere. So if the market, just think about that. Like, think about how you would have to trade if effectively everything was sideways. If everything was sideways every single day and the market barely went anywhere, what would you do? There's ways to make money, but you can't be a directional trader to do that. So, I have this arrow in my quiver. If this is the environment we trade in, I'll be okay. But it's not going to be fun. And everyone that is a buy and hold and a YOLO and a hodler that gets no direction, like, you don't know what to do. You're just going to, I guess, eventually lose interest, and you're going to wonder like why you're not growing your accounts at all. But I'm just saying, like, there could be a point where we don't have really any net gains, and I just want to make sure like I can still provide income for myself, right? So anyway, all right, I'll stop on the big picture stuff. I'll stop soapboxing, but just saying, like, we have not been this highly valued for a long time, and usually returns are very lackluster moving forward. So just letting y'all know. All right, Dow. Same thing on the Dow. I mean, look, every index. If you go S&P, Nasdaq, Dow, every single one of them, I love a pullback, right? So this big gap from Friday to Monday, I'd love at least that as a pullback. At least that as a pullback. I do have some puts on the Dow that are looking pretty good. They're out to June. Here is the Dow. Here are some of my trades. Close out DraftKings for a winner. Close out Shopify. I'm going to keep Shopify running for hopefully a nice, it's up about 80% right now. I mean, max profit, that's not bad. Max profit here is around 100 and some percent. So I get 103 divided by 97. Max profit's 106%. See if I can close this one down. We're at 110.56. 181. It's not bad. Let me see if I can squeak out a 190 here. See if it'll give me a generous fill. Nope. 185. Max credit's $2. The nice thing is we're well above the expected move. So by Friday, we shouldn't see Shopify come back down to 106. I want to see it, obviously stay above that. If it stays above 106, I make 100 some percent on the trade. So, all right, doesn't fill. I'm just going to cancel it. I'll revisit this trade. I was going to go into the Dow trades. So on DIA, I have some puts. I've got some puts on AT&T that I closed out yesterday for profit as well. So AT&T, this naked put combo, up about 50%. I'm still going to hang out of these a little bit longer. I closed out another naked put combo. It was a 20, 19, 18, and 17. I closed out all of those for credit yesterday. They were, I think it was $2, $3, $4 of income, and I closed them out for like a 5 or 6 cents debit. So I have some other ones there. Dow, I have some 111 trades. Here you go. So 111, that is up about 75%. This is in 47 days. This naked put is now up about 85%. So kind of the same thing. It's like I'm in good positioning here. Probably by Friday, I will likely look to take some of these profits. The trade's been open for about 43 days. I'm getting to that halfway mark. And, anytime I get to about the halfway mark of my option trades and I have a majority of the profit, 75% of the profit, 80+% of the profit, I'm likely just going to take it. It's more capital efficient to do that versus waiting another, 40 some days to get that extra little 25% or 15% winner. So probably by Friday, I'm closing out some Dow for winners. Would be naked put and 111. NVIDIA naked puts I closed out this week as well. Had a win on HIMS, win on AMD, did some rolls this week, did some rolls on MicroStrategy, did some rolls on Tesla and IWM. I've got some more covered calls I talked about yesterday. I'll be watching those closely. They expire this Friday. I don't think anything's going to get called away. IBIT might be the closest one at 62. We're trading at 58.83. So by Friday, are we going to get to 62? Probably not. If it is, I'm going to roll it. Bitcoin is trading around 103.4. Do we get a surge up here in the next couple of days? I mean, maybe over the weekend. I still think this thing's to come back. If we do get a pullback, at what point? How do you decide? Take profit on RTY and hold it. So what trade are you talking about, Maddie, on RTY is the trade that I took? The trade I'm in on RTY is a hedge. I'm in IWM. Like IWM is my income trade. RTY is my hedge trade. So that's only there if I need it. I basically need to finance covered calls to make over $500. Yeah, it's a hedge. So I'll keep the hedge open, man. The hedges are always going to be open. The hedge is as it's open. If it offers 2-to-1, 3-to-1, 4-to-1, 5-to-1, or beyond, then I'm managing that for profit. But the hedge is there as a defined risk. It's there if I need it. It's just there for protection. I'm willing to say like the hedge is worthless. If prices go up, the hedge is worthless. So I'm not going to manage that and take a smaller risk. I'm like, it's there if I need it, because look, at any point this market could, pivot and go the opposite way, and you never know why. But anyway, that's all. So Bitcoin, watching the all-time highs, I think we still have a bit of a backfill in this area. I hope that we do. I mean, I'm obviously less excited of watching Bitcoin go to highs and then still go higher. I'd be a little bit more excited to see Bitcoin hit highs and then come back in and offer some support. I don't know if we're going to come back to these lows again, but that would be a great spot to still accumulate some more Bitcoin. Small, bigger. I'd probably go a little bit bigger here at the lows because I think we can trade the range. But if we do break to all-time highs, I'm not going to stop it. Obviously, I'm just trying to let the price appreciate. But I think just how this is pushed up pretty inefficiently, I think coming back into these levels would make some sense. Okay, let's go gold and silver. Gold is doing what I said it would do, which is we're going to decline. I kept saying for weeks and weeks and weeks, it's like I can't justify buying gold at these all-time highs. And everyone's like, "What's gold going to do? We're stop caring about gold for a second." It's like, look, you're up a ton of money, so enjoy it, and now just be bracing for a bit of a pullback. It's fine, right? I'm actually more excited now that it's like, good. Find the 50 moving average, find the 100 moving average. Give me some levels to say, now I'm going to start looking at gold futures again. Now I'm going to start looking at GLD again. I'm more interested in positioning for gold. Okay, up here with a 20+% move from the 200 moving average, I'm not that interested. But in this area, I'm way more interested. I think gold's bull trend is still intact by a lot, but I want to see a pullback, and we're thankfully getting it. I think this also happens to be flowing with the fact that the markets are up and there's less risk. At least the perception is there's less risk in the market. It's more risk appetite, risk on. That gold has taken a little bit of a backseat, right? So I'd like to see this continue to go. Look, this would be a really easy trade in gold. Just watch it and watch it and watch it and watch it. And maybe it's a very slow, methodical pullback. And everyone that's trying to get crazy bullish on gold is just going to have to wait longer. But if we pull back into something like this and we find that 100 to 200 moving average, I like positioning for, more upside. Try to get to all-time highs again. So I like gold. I'm still going to trade it. I'm looking for futures trades and GLD positioning if we are offered up the trade that I want, which is going to have to be a pullback. Silver, same thing. I'm not really going to load up on silver. I already am in a way, but if we came back to 29, I'd still trade silver futures. We came back to 26, I'd still trade silver futures and SLV. So between those two would be SIL would be my silver futures trade, and SLV would be my kind of ETF spot price. If we come back to 29 or 26, I'm watching those levels. Okay, S&P, we already talked about it. Alex. Okay, I'm thinking that we obviously had a great run from Friday to Monday's close. I think we have a pullback coming. I hope we have a pullback coming, because if this keeps melting up, there's not really much that I'm going to do to participate in that melt up. My portfolio is tilted, yes, but I just kind of hate buying it right now. So I think if we get a pullback even to a 570 or 5,700, like give us a gap fill, you know, and I think that's enough to maybe justify a little bit of a long sample. We pull back a little bit deeper, sure, a little bit deeper, that's fine. But remember, this is what I was going to say earlier. It wasn't that long ago where I said after this high to low, if we come back up here and make a lower high, don't be surprised to see a higher low and a lower high and a higher low. And maybe this is 2025's trading year, right? Everyone's sitting here like, oh, we're going to all-time highs. Like, yeah, we might. We might go to all-time highs, but we also might not. We might not go any higher. We might not go any lower. And the rest of this year is like head spinning uncertainty of like, we still don't know if things are clear. Um, and unfortunately, I think the reality is if Trump administration is going to successfully pass a tax bill, negotiate this trade stuff, raise the debt ceiling, fiscal policy spending continues, I think the crappy part is there might not be much of a chance to see this market by the time you think like, oh, the coast is clear. We're going to be up to freaking all-time highs, and then you feel like an idiot trying to participate here because it's like, I guess I'm buying the all-time high after missing out on all this, which is why we were active. I mean, all through this fear, as scary as it was, I was actively trading this stuff, and it was nerve wracking, right? But it worked out okay. Um, I'd like a dip. A dip makes me a little bit more excited to trade to these all-time highs as opposed to melt up, melt up, melt up, melt up. So I think the reality is this: we get a trade that because of all the puts that are going to be expiring this week, worthless. I think that the cycle shifts and we have at least a bit of a gap fill. I hope that we do. And from there, I'm looking to participate a little bit more. Probably, like I said, a 1-1-1 trade on my margin accounts where I could afford to own the asset if I wanted to. It might be as high as like a 530. It might be as low as like a 480. It just depends on what the structure looks like going out maybe, I'd say 60 days or so. But July is a big trade war window. I'm not sure what the now new 90-day pause is for China. That might be out to like August-ish, August, September now. But there's still some uncertainty, right? The Fed's looking to cut in July now instead of June. But anyway, it's like there's risk. There's always going to be risk, and I'm just cautiously everything. I'm certainly cautiously bullish. I think this market, might surprise everyone by going to the all-time highs, and that would be my biggest surprise, and probably where I'd be the most upset is if it just goes to all-time highs without anything, no gap fills, no pullbacks. This is just like stupid melt up, right? And then you wonder, like, well, now what do we do? Because maybe this thing goes higher. But I'm hoping we get a pullback. I'd say my probability is higher that we at least get a pullback and just have some type of balance here. Because look, you're getting gaps in the futures market, which is rare. You're getting gaps in the indexes, obviously. But these are not just like little tiny like fractions of 1%. We're talking like 1, 2, 3% gaps. Those usually don't go unchecked. Okay. All right. Russell is trading at 207. I'm still just selling calls. It's boring, but I'm making, anywhere between like 150 to 250 bucks a week by doing that. And I'm just going to keep doing it. And I'll let all of the extrinsic value get sucked out of these covered calls. I'll just keep rolling it. I'll keep selling it. And, I own the shares. I bought the shares at like 199. I'm selling $200 calls. I'm just going to keep riding that down to collect some income. And then, like Maddie asked earlier, the hedge was on RTY just in case I need it. But basically, if I sell, let's say 3 weeks of covered calls, I finance the hedge, and then after that, it's all income. And if the market doesn't go anywhere, it's easy income. Buyback, I mean, we're at like 40-year highs on buyback, so everyone's buying back stock. Everybody is. I took profit on AMD. I had a ratio spread all the way down here that closed out 88 cents credit. I closed it out for like a 9-cent debit. So this trade is closed. So honestly, like, I don't care. I mean, AMD, if it was offering up any retest of this low, if we came back to this low or came back to this structure, then yeah, I'll just either take more income trades or consider some long positions. If anything, I mean, I see this structure on the daily chart. We are back to the 200 moving average right here. Okay, we hit a high, we hit a high. Is this going to set up some type of head and shoulders pattern? Maybe a pullback in here for a higher low. If we come back to like $100, it's not a bad trade to look at. The big picture is, above the 200 moving average, this is a buy zone. Look left, look left, look left. You got lots of upside targets here. If you're looking at some structure, maybe there's a chance to buy, buy a dip around $100. Okay. VIX 1839, a little bit up on the day, nothing crazy. Move index bond volatility is down. SVXY, that was a trade that I bought during April's dip. DXY, just watch it. We're still on this trend line. We don't have this like aggressive bear market on the dollar. I still think the dollar is a sell trade. I just think it's here or here. Until we get more confirmation on the dollar. I did take a trade yesterday though. I actually meant to post this in A1 for FOREX, but I bought this yesterday. This is during my YouTube session at 3 p.m. I bought yesterday around 111.82. It was a market order, but you can still take this trade if you want. I think the trade's still valid. So basically, I'm up about 20 pips right now, 24 pips. But I bought here, and I put in a scale in order. I'm going to buy a second trade right here, okay, and then a third trade down here. My target is the high. So if trade number one, which is right between this 23 and 30% pullback zone, if this goes to the high, I'm going to cancel this trade, and take my profit of about 350 pips, right? So if trade number one gets me to 350, I'll take profit. If trade number two is filled, then I'm looking at 350 on trade one plus around 650 on trade two. And if trade two gets filled and goes to the top, then I'll cancel trade three. If all three of them get filled, then this would be about 900 pips. So 900 plus 650 plus 350. My stop loss is below this low. All I'm looking for price to do is get back into profit, right? So I'll get this one set up. But if you're looking for the entries, I essentially got in here around 111.85, which is roughly current market. Okay. And then my pending orders lower, and you just adjust your trade size. I trade like this all the time in Forex trading. I trade small and I build positions and I make a ton of pips. So, if this makes 350 pips, cool. I'll make 350 bucks. If I get that combined with trade two, I'm going to make about $1,000, right? I'm willing to ride this area out as long as price doesn't invalidate the 101.50 low. Okay. So that's my plan on the euro dollar. I like the trade. I think we can retest the high. If we get to 1500 or higher, I'm going to take some profit to protect. But if we still pull back, this is still the same thing as the dollar index. If we still pull back on the dollar index, meaning the dollar index goes higher, this euro dollar still pulls back. I think we're looking at areas to bottom out and then go higher. Okay. All right. Now I'm seeing a little run on SPX is breaking some fresh lows for the morning. I'm just watching this right here. I'm going to see if we can get down into like 58. Let's see if we get down. Fill this freaking gap. Let's go down to like 58.45 today. Let's see what happens. Let me see if I can set a chart while I'm here. 58.45. If we get some direction on the day, that'd be nice. I have a butterfly spread that's down to 5,800. I'm going to keep a close eye on that one just in case I can turn that into a winner. So this guy down about 20 bucks right now, but there's some big upside potential in this one. I can turn hopefully a 35-cent debit into maybe, I don't know, 60, 80 cents a dollar, make a winner there if we get some direction. So let's go. Give me something. All right. Any questions on the euro dollar? So I'm in basically at market. The second level for me is a 108. It's a 108.80 entry. 108.80. And the other one is just below the 618. It's basically filling this pocket, and that is a 106.50. So I have a 1.0880. I'll just type it instead of trying to freehand that. So 1.0880 and a 1.0650. Okay. And then the trade I'm in here is basically market. I got in around 111.88. I did that trade yesterday live. So those are my three levels. My target is up here. 1.1500 to 1.1550 is going to be my profit target. So that window is my profit target. Stop loss is there. Okay, I'll take a screenshot of that. I'll post that in Pulver Alerts. I meant to post that yesterday after my afternoon session, but the trade's still valid. Okay, so I'll get that posted. All right, good stuff. We did gold, we did oil, we did silver, we did Bitcoin, we did some stocks, we did some indexes. Let's go currencies. Aussie CAD. Maybe I still get a pullback on this Aussie CAD, and I'm totally fine with this. This is a currency pair that it's one of my absolute favorites. You want to trade technicals, you want to trade pivots and structure and overbought, oversold conditions, efficiencies. Aussie CAD and New Zealand CAD are freaking awesome. So if this is a swing low, swing high, we get any type of pullback in here, I'm going to buy. I'm going to look for a symmetry swing. That's it. So if I get a pullback here, I'm still looking to add more, 8,800 to probably 8,650 area, add into a swing, bring my cost basis down, look for a three-wave move, and I'm still trying to get this thing back up to like 94. Okay, don't worry, BC, you can just close your eyes. Aussie Swiss still looking to see if this thing will carve out. If we have a pullback here, I'm looking for a 3 to 5 wave move, or we come back to the 200 moving average, hit this resistance. We just keep grinding higher, grinding higher, grinding higher. I've said this too. If gold is going to continue to fall and pull back, I think that the Swiss pairs will improve. I'm already up some profit. I'm looking for a lot more, and I want to see this area get hit. So if we come up into that area, to me, this is a low to high swing. I'm looking for a pullback and then a push up into wave 3 symmetry. Aussie yen, no trade. The yen ripped today. Maybe this is just the backside of the trend line test, but that was not the trade. The trade was buy this thing during August or April's retest of those August 5th lows and ride this risk on. That was the best trade. CAD Swiss was probably that CAD yen was the best trade. This was the best trade. Technically, this was the best trade. This thing basically tested the low, and the dollar yen tested the low. The Aussie yen breached by a pretty decent amount. I mean, that's 90. We went down to 86. I mean, that's a 400 pip breach. That's not easy to trade. But CAD yen respected the low really nicely. Easy one to trade off those lows. Dollar yen tested the lows as well. Right here between the 141 to the 140 handle. And same thing, tested. Somebody asked me, would I be long dollar yen? I said, no. If you're long here, right, that's your trade. Don't be long at 148. So I don't like the trade now. You missed it. You missed an 800 pip move off those lows. So don't chase the stupid thing, right? All right, dollar crosses. I'm still looking for a pullback on Aussie dollar. Hopefully we'll get one. Hopefully the Aussie dollar can settle in here. We can get a swing and then a push into open space. As long as we don't invalidate these lows, I think a swing trade looks pretty good on Aussie dollar. And then open space, this thing's great. If we get to like 64.50, 6,500, there's not much stopping this thing until we get to 68. So I mean, again, it's all based on the dollar. But if we hold structure between about 63.50 and 6,300, then I like that as a swing trade. CAD Swiss, same as Aussie Swiss, just waiting to see how this one kind of plays out. Do we find some tops in here, pull back, and then have a symmetry swing above the 200 moving average, and then take some profit in this cluster? I'm good with that. CAD yen, Swiss yen, Euro Aussie. Not really. I mean, these are just trades I'm not really liking. Euro CAD is still okay. It's not moving as quickly as I'd like, but I still think this thing's going to push down towards like 5,400. Be careful on it. I mean, it could be just a very annoying range. But if we find this level or lower, then be protecting your short positions if you're short Euro CAD. Euro Swiss. This one is looking better, kind of the same situation. Do we have what it takes to get all the way back up here to this high? If we do, I'm taking profit. Then we can pull back. I can structure this trade again and then get a swing up. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, no trade. Euro dollar, I just explained that one. Pound Aussie, I mean, if you're looking at a shorter time frame, this might be a low to be participating in and see if this thing rips back up to these highs. But it'd be tight stop and a run back up to like 2.10. Look at it and confirm it on a smaller time frame. Pound CAD, no trade. Pound Swiss, still long. If you got long anywhere in here, my target is going to be at 1250 to 1350. So if you're still riding this thing out, there's still some upside potential. We could get back to the highs, but also trailing stop loss in those levels. Pound yen, no trade. Pound New Zealand, no trade. Pound dollar, nothing yet. This one is sideways. Maybe a dollar retracement would maybe pull back this pound dollar a little bit, but I'd wait. I think euro dollar is a better setup. So honestly, I don't like the pound dollar. New Zealand CAD, same as Aussie CAD. We get a pullback into this area. This is awesome structure right here. If we get a pullback in, and this one, I wouldn't mind just doing this. Buy, buy, buy. Stop loss below. If this level holds and we get a symmetry swing, we're pushing back up towards these levels. That's a nice profit. Low risk trade, high reward trade, probably good probability. New Zealand Swiss, still watching this one for wave structure. We get to the highs, we pull back, we go to symmetry. That's at least my profit target. If we go to fifth wave symmetry, I'd have to be pretty patient for that one, but I have been patient on these Swiss pairs for a while. New Zealand yen, I'd say no trade. Not right now. I mean, you had your chance to buy the lows. New Zealand dollar, similar to Aussie dollar. If we go high, low, lower high, lower low, there's areas to buy in here as long as we don't break the lows. This is open space trading. And the hard part here is if you want to buy in this area, obviously it's a swing trade and that could work out really well. But if we just break the highs, we might still just make higher highs. Like this open space might be an easy trade just to, and I hate this entry, but if it was just a buy stop and another buy stop and another buy stop, and this thing just goes higher to 63.70, maybe that's the trade. Let the dollar be all the noise, like be noisy, be messy. But if it just goes higher, buy stops do the job. So rather than trying to, guess what the dollar's trying to do. Dollar CAD, I don't like it at all. Dollar Swiss, I'm still long. Dollar yen, no trade. So that's kind of it. Top down, currencies, indexes, little futures action. Price is still contained. So we had like a little bit of a fake out move right there. We might just be sticky right around that 5,900 handle today. We have a major expiration on Friday with monthly expirations. It's crazy how much of the options expirations are all calls for this cycle. It's like 60% of the S&P are all call options, and all the puts that were put in are going to just be worthless. All the puts were, hedging into those April lows. So anyway, we'll see what happens. But these levels, I'm gonna close this thing down. Yeah, I'm gonna close this down for a small loss. So 15 cents credit. I got in for 35. Yeah, let's see if I get 20 cents out of this. 15. Be generous. All right, I'll leave that there at, I guess I'll leave it at 35. Try to get a break even here if I can. See if we break this low. If we break that low on the day, then maybe that gets me back into break even or better. I'm just curious if we have a direction. I mean, this little melt up move from Tuesday would be nice to kind of see like a melt down move for today if we have any direction. Otherwise, I think by Thursday, Friday, like this is probably going to get filled. If there's any real direction, otherwise, after this week's expiration, coming into next week's trading, don't be surprised if we're down here. I think this market has, just efficiency standpoint, probably a little bit of a pullback coming. Okay. All right. Think that's going to do it for today. So all in all, we'll see what happens. I like buying dips. I just think the dips have to come. We need to fill this gap from Monday. If we do that, I think that'd be great. We pull back here. That's at least where I'd consider, okay, now I'm going to look at some 1-1-1s. Now I'm going to look at some ratio spreads. Now I'll start revisiting some trades. Honestly, my least favorite trade right now is going to see this, if this market just keeps going higher, 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 higher. I mean, look, I did synthetic longs here. I bought debit spreads. I sold a bunch of puts. I made a lot of money. Okay. But it's not enough. It could have been better. I could have been more aggressive, but I mean, nobody knew. I didn't know how volatile this thing was going to be. But here we are, like, okay, there is clearly resistance. I spent a lot of time just technically going through the charts. It's like, okay, so a symmetry swing, that could be resistance. A measured head and shoulders, that could be resistance. None of them, right? Like nothing has stopped yet. So this, especially this gap, like that gap kind of threw me off of like, okay, we're up 3%. 3% higher than like all these meaningful levels. We were above the 200 moving average. So even looking at the, I think I've got a blank workspace in here. This one. Okay, this is a 50-day and a 200-day, and we haven't spent any time in between. Like this market's like, nah, there's no indecision. Just go gap. I mean, that's what I'm talking about. This is where I thought, yeah, a little bit of indecision, and it just blew higher. So same thing on the SPY, and that's pretty unusual. Like that is a kind of a blow off rally. But all that tells me now is, okay, so we're in between here. Everything's kind of back above, but I think there's room to kind of pull back and have a gap fill. We could still be well supported. The bulls have a lot of room. The bulls have a lot of cushion now to still hold and maintain this recovery, which is kind of a good thing. But I think a dip would be, I mean, as somebody that wants to buy the market, a dip would be nice. A dip or pullback would be nice. Okay, and it's not just there. Like I'm not going to get crazy aggressive, but I will start, putting on some trades that protect me from a bigger pullback, so I can still, if I was to take any assignment, I would own it low. I'd own it at like April lows and work with it. So anyway, point is, if we get a pullback here, that would increase volatility a little bit. I'll sell some more premium and probably do like a 1-1-1 trade or a SPY ratio spread and see if I can pull in. I mean, if it's an income trade, it might just be a couple $100, but it's better than nothing, and I'll just keep kind of playing around with that over the next 30 to 60 days. All right. That being said, I'll let you go for today and come back and join us tomorrow. All right. Thanks, everybody. See you. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.